Hi, and welcome back again to Tim Bigham's Big Time Options, Edges and Hedges, taking a look at some post-earnings profits, a post-earnings post-mortem, if you will, on NVDA. As we posted our video yesterday, pre-earnings that came out after the close yesterday, of a comparative from 3 months ago earnings till now, how the call calendar spread had become much cheaper now versus 3 months ago, simply because of that huge IV and term structure vol differential. Those who want to take a deeper dive can jump in and take a look. This one's just a quick little recap on how we were able to make a very nice 78% gain, basically by closing it out right on the open today. Certainly could have held on longer and end up working to even more profit, right? So that's up to you. But as I always like to say, never look a gift horse in the mouth. Once that IV reverted enough, right, and the stock moved in our favor, happy to take the trade off. So let's jump in and take a look, shall we? So here was the original trade, right? We did it right on the open yesterday, or before earnings came out after the close yesterday. You can see buying the September 227.5 call, selling the very expensive August that had the earnings embedded in, if you will, 227.5 call, paying about $2.30 net debit. You'd be about 9 deltas net long. The term structure vol, the difference between the vol we're selling, about a 97, and the vol we're buying, about a 43, certainly gives us that very nice term structure vol edge. The one thing you know after earnings, term structure of vol will certainly begin to flatten. It did, as we'll see in a second. Stock was about 212.63 at the time. So we got into the trade. Cost about $230 for each spread. That's the max loss. Plus, you had the weeklies between the August 28th expiration and the September 18th expiration. And actually, in NVIDIA's case, the other dailies, right, they have 3 expirations a week to continue to hedge if need be to lower this cost. We didn't, because the stock opened higher on the opening, opened at 222.86. As you can see, we got basically right pretty much on the open, got out of the trade for a 408 net credit, for a very nice gain of $1.79, or 78% winner right overnight on NVIDIA. Certainly happy to take that. You can see that that term structure of vol, right, it was only 38 before. Here it was over 53, so we saw it start to flatten, mostly right by that short-term one, as expected, dropping about 22 vol points. The longer-term September traditional, right, did drop. We knew that too, right? But it was fairly cheap compared to 3 months ago. Was much more expensive to begin with. So that drop was only about 7 points. So that term structure vol flattened, right, by over 15 points, right? So that term structure vol differential dropped to 38 from 53.5 roughly. So overall, we made that very nice gain on the trade. The stock was up a little over $10 when we closed out the trade on the opening at 222.86. We would be long roughly about 10 deltas, give or take. So you'd expect the delta gain on the trade overall of about a $1.05 delta, because we were leaning bullishly. The stock did go up, right? So able to capture that as well. But probably more importantly, and this is the, if you will, the reason we look at implied volatility so closely, we made 75 cents or so on that term structure of vol flattening, right? This 15.5 point flattening on the term structure, right, from pre-earnings release to post, right, gave us a very nice additional 74-cent gain. So of our $1.79 gain, basically a $1.05 from being right on the stock direction, 75 cents or so from being right on that term structure of vol flattening. This one, you know, will happen almost invariably, so you do have that kind of built-in edge. If you do have the stock move in your direction, even better, right? So kind of highlights how we go about structuring trades that give us that edge. It doesn't guarantee that it will be a profitable trade at all, but this one certainly worked out nicely for a very quick 78.17% gain overnight on NVIDIA. So hopefully provide some insight into how we go about identifying opportunities, doing, in this case, that comparative to right before the last earnings report to this, how much cheaper a very similar trade was now versus then, right? Take a look at the previous video and it will take a deeper dive for you on that. So until next time, as always, here's the good trading.